In this video, I'm going to show you how to indicate the impacts of transactions on the accounting equation. There are two methods to show the impact of transactions. In this video, I use the second method, but make sure to watch the video that contains the first method. Okay, then let's take an example. The following are transactions relevant to the month of January 2020 of Amar's business. So these are the transactions occurred in the month of January 2020 of Amar's business. Now we need to show the impact of each transactions on the accounting equation. Now for this, I'm going to draw a table. Let me show you the sketch of this table. We need to have the first column for the date. There are dates given, so we need to enter the date in the first column. Then we need to have two rows like this. First row to show the accounting equation. Assets equal equity plus liabilities. Then the second row is to show each accounting item. For example, asset items like stock, debtors, cash, and liabilities items such as bank loan, creditors. And we don't maintain columns for equity items. We have only one column for equity. So this is our first step, drawing the table, drawing the sketch of the table. Then we go through each transaction and identify asset items and liability items for us to label the columns. Now these columns we need to label with the names of asset items and liability items. Remember, first of all, we need to show asset columns, asset item columns on our left side. Then we need to show the equity column. And finally, we need to show liabilities columns. Okay, let's go through the first transaction. Invested 500,000 as capital. Now here we know that cash increases and equity increases. So cash is an asset. Therefore, we need to have the column called cash. So my first asset column is cash. And equity, we don't divide into columns. So we have only one column for equity. Now what about the second transaction? Obtained a bank loan. We know that when a business obtains a bank loan, cash increases and also liabilities increases. Now already we have a column for cash. Therefore, we need to have the liability column called bank loan. Now let's go through the third transaction. Purchase goods at this much. So here what happens is the asset called stock increases and the asset called cash decreases. Now we have already a column for cash and we need to identify stock as another asset column. So I'm going to write stock here. So basically what we do here, we identify the columns that we should include in our table. So for now, we have two asset columns, cash and stock, and one liability column, it's bank loan. Now let's consider the next transaction. Sold goods at rupees 50,000 on credit. So when a business sells goods on credit basis, stock decreases and debtors, the customers who owe to the business, increase. For stock, already we have a column. Now we have another new column, new asset column, which is debtors. So let's write debtors in our list. Okay, so far we have 3 asset columns. January 18th, sold goods which cost for 40,000 at 60,000. Now here, what happens is stock decreases because business sells stock. On the other hand, business receives cash, so cash increases. And this transaction results in a profit. So profit leads to increased equity. And for equity, we have only one column. And already we have stock column and cash column. So no worries. Let's check the next transaction. Receive 30,000 from a debtor. When business receives cash from a debtor, cash of the business increases and debtors of the business decrease. So already we have these 2 columns, cash and debtors. Now let's move into the next transaction. Paid bank loan interest 5,000 rupees. Bank loan interest is an expense. When the business pays an expense, cash decreases. And on the other hand, equity of the business also decreases. So already we have a cash column and we don't divide equity into columns. We have only equity column. Okay. Then the last transaction is paid 10,000 from the business for the telephone bill of Amar's house. Now what is this transaction? This is a cash drawing. Amal is the owner of this business and he withdraws cash for his personal use. So what happens due to this transaction? Cash of the business decreases and equity of the business also decreases because of this drawing. So again, we have cash column and we do have our equity column. Okay, finally, we have 3 asset columns and 1 liability column. So how do we present these columns in our table? Remember, when you show these columns in the table from left to right, you need to show them according to this order. Definitely, first of all, we need to show all the assets. When it comes to assets, we need to show first of all non-current assets. In this example, we did not find any non-current asset. And then you need to show the current assets. So when we draw the columns of current assets, we need to show them according to this order. Starting from our left side, first column goes to stock. Then second column goes to debtors. And third column goes to cash. So always remember this order. So next what we show is the equity column. And we don't divide equity column into columns. And thirdly, we show liabilities columns. And here again, first of all, we need to show the non-current liabilities. And then only we show the current liabilities. Here we do not have current liabilities. We have only one non-current liability, which is bank loan. So what is our order of columns? First is stock column. Second is the debtors column. Third place goes to cash column. And fourth place or the fourth column is equity column. And the last column, which is the fifth column, is bank loan column. So we have altogether 5 columns. Okay, then let's finish our table now. Now what we do is we are going to divide the second row into 5 columns. Okay, here are the 5 columns. Now I'm going to label each column. Can you remember our first column? It's stock. Then we have debtors. And then we have cash column. All these 3 items are asset items. And then we need to show the equity column. And finally, we have bank loan column. And in the first column, we show the date of each transaction. So let me label it as date. And now we need to write our accounting equation. All these 3 items are asset items. So I'm going to write assets on top of them. Assets in rupees. Then we have the equity. So here I'm going to place the equal mark because after this column we have the equity column. So on top of equity, I write again equity in rupees. And here I place the plus mark, the addition, because we need to add equity and liabilities. So bank loan is a liability. So I write liabilities in rupees. Okay, now our table is ready. Now it's time to record the impact of each transaction. Now this is our first transaction. The date is 1st of January. So we need to record the date of each transaction. So what is our transaction? Invested 500,000 as capital. So we know that cash increases by 500,000. And then equity increases by 500,000 due to capital. Let's move into the second transaction, January 2nd. Obtain a bank loan 200,000. So cash increases by 200,000. And on the other hand, liabilities increase by 200,000 because of this bank loan. Bank loan is a liability. Then third transaction, purchase goods, January 4th. Purchase goods means stock increases by 100,000. Here the business has to make a cash payment. Therefore, cash decreases by 100,000. Okay, next transaction, sold goods on credit. 10th of January. Sold goods means stock decreases by 50,000. And on credit means debtors increase by 50,000. Okay, next transaction, sold goods which cost for 40,000 at 60,000. So what happens on January 18th? Stock decreases by 40,000 and sold at 60,000. This means cash increases by 60,000. And there is a profit because business sold 40,000 worth of stock at 60,000. So what is the profit amount? 60,000 minus 40,000, 20,000. And we know that profit increases equity. So equity increases by 20,000. So this is our impact. January 24th. Received 30,000 from a debtor. So cash increases by 30,000. Then debtors decrease by 30,000. January 30th. Paid bank loan interest. So cash decreases by 5,000. And since this bank loan interest is an expense, equity decreases by 5,000. Here's our last transaction. Paid 10,000 from the business for the telephone bill of Amma's house. This is a cash drawing, so cash decreases by 10,000 and equity also decreases by 10,000 because of drawings. Okay, now we have recorded the impacts of all the transactions. Now it's time to find the closing balances. So here you need to find the total value of each column, the final value of each column. So here you need to consider the plus and minus using your mathematical knowledge. Plus means increase, minus means decrease. Therefore, we need to have a separate row to indicate the closing balances of each column. So here I'm going to write closing balances or closing balance. Now, what is the closing balance of stock column? Now, first of all, we can see that there is a plus 100,000. Then in the next transaction, there is a minus 50,000. So this means the value of stock increases by 100,000. And because of the next transaction, the value of the stock decreases by 50,000. So what is the net value now? It's 50,000, isn't it? Then because of the third transaction, again, stock decreases by 40,000. So plus 50,000 and minus 40,000 is 10,000. So our closing balance of stock column is 10,000. Then the debtors column plus 50 minus 30, it's plus 20. So it's 20,000. So the meaning here is at the end of the month of January, In Amar's business, there is a stock worth of 10,000 rupees and debtors worth of 20,000. Right. What is the closing balance of cash column? Plus 500 plus 200, it's 700. Minus 100 is 600. Then plus 60 is 660. Plus 30 is 690. Minus 5 is 685. And again minus 10 is 675. So the closing balance of cash column is 675,000. Then equity column, 500 plus 20 is 520. Minus 5 is 515. Minus 10 is 505,000. 505,000 rupees. Then the bank loan column, we have only 200,000. So let's write it 200,000. Now we have found all the closing balances of each column. So if you want, you can check whether your accounting equation balances or not. Right. Before that, we are going to do one more step. Now here, this stock, debtors, cash, all these three items are assets. So we need to show that these three items added together by using pluses. Stock plus debtors plus cash. Then our equal mark. And again equity plus liabilities, which is bank loan here. Then also we do the same thing for our closing balances. Balance of stock plus balance of debtors plus balance of cash equals equity balance plus bank loan balance. So here what we did was we just followed our equation by putting pluses and equal mark. As I told you earlier, we can check whether our accounting equation balances or not. So for this, we need to add all the closing balances on the left side of the accounting equation. This means all the closing balances of asset columns. So we need to find the sum of all the closing balances of assets. 10,000 plus 20,000, it's 30,000. 30,000 plus 675,000 is 705,000. So we have 705,000 on our left hand side. What about the right side? Let's find out the sum of the values on the right side. 505,000 plus 200,000. It's again 705,000. So our accounting equation balances. I hope you understood clearly how to show the impacts of each transaction on the accounting equation using a table like this. See you then. Don't forget to subscribe.